But what I want to talk about tonight is basically what I believe one strategy is of building a successful portfolio. It's worked very much for me in the past and also for many of my clients doing it this way. It doesn't suit everybody. Obviously, there's many changes to it, but this is a good way of doing it. What I did here today too, the Reserve Bank kept interest rates normal. Again, they just kept them at the 0.1 or 0.15, whatever they are. With interest rates, they're saying that our inflation at the moment is only at 1%, 1.1%. And I'm not sure about you guys, but I don't agree with that. I'm seeing everything rising horrendously, whether it's used cars, whether it's just furniture. I do believe the government's a little bit behind on the data, but we'll see what happens towards the end of the year. I'm just looking forward to, seeing what we can come up with. Just got to be careful. The Reserve Bank doesn't put rates up on us. All right. Alrighty, guys, I want to get started today. So I'm going to show you a slideshow today on a simple structure that we use here at The Property Bloke on how we build a successful property portfolio. And it's successful, not just successful, it's actually safe as well. It's what we call, a safe. Like every investment has its risks. And like I always say, this is general information. Please don't go out and think this suits you exactly to a T. But let's get started and I will show you what I'm rambling on about. Okay, here we go. So just let me start my little slideshow. Bear with me 2 seconds. Alrighty, so guys, I just wanted to show you this quick slide. So the reason why I do my lives, the reason why I love my job is because I really like to see the everyday Australian really unlock their potential and see what they can do, whether it's property investment, whether it's any sort of investing. It doesn't bother me as long as you're looking after yourself and doing it safely. But here at The Property Bloke, we're really proud of the fact that we do basically open a lot of people's mindsets and they realize what they can and can't do. And sometimes I meet people at 45 and I really wish I met them at 35, giving them a bit more, another 10 years. But the quicker I meet people, the better, because I can get them started on their education and mentoring. Alrighty, guys. So why do people invest? This is a question I will always ask you when you start with us is why do you want to invest? What's your main reasoning? And if anyone wants to sort of say on here as well, they can, g'day Nathan. He's got a few friends coming. So basically what I want to know of people is why you want to invest. This is one of the first things I do before we even get too into their personal details. Alrighty, so these are the main reasons that we see why people want to invest, and there is others, of course. Financial independence is the main one. Tax strategy is a big one. Obviously, control of your financial future, pay off your home loan, helping your kids. That's becoming more and more of a reason as the property market gets more and more crazy. But that's definitely one. And of course, replacing your income. Yeah, at the end of the day, replacing income doesn't mean you want to replace all your income. You might just want to replace certain parts of your income, because I really analyze how much you earn per day and I work on replacing a daily sort of figure rather than a yearly figure. Oops, sorry, and family security. Forgot about that. All right, so let me just do my little thing here. So the main reason why I like the people to invest is so they have choices. They can choose what they want to do, whether it's retire early, whether it's help the kids, whether it's financial independence, whatever you want to do. And it also depends on what level of investor you want to be. You might want to be what we call a passive investor, and that's someone who sits back and relaxes and just sort of doesn't invest too aggressively. But then you might have your professional investor where they're more of a higher risk taker and willing to be a little bit more aggressive to get there quicker. So the good parts of what we do when it comes to setting up your foundation of your portfolio is having cash flow, some growth in there, and of course, education. And that's the reason why I do my lives every Tuesday is education, because there's a lot of things I teach on here or just discuss on here that people don't realize it's out there. I had a client message me over the weekend. It wasn't actually from the live, but it was something we discussed in the live. It was one of my articles I put in our quarterly magazine that we send out to people about depreciation. And with him, he realized his accountant was not claiming the depreciation correctly, and his accountant actually believed that he was claiming the depreciation correctly. So I broke down, it just took me a quarter of an hour to break down where it was going wrong. And I've basically in the middle of referring him to another accountant to get a second opinion. And that's just through education, guys. And honestly, over a 10-year period, that client would have lost at least, and I'm talking a minimum, 45 to 50 grand in tax benefits in his hand. That's $50,000 because the accountant is not educated in property. Okay, so this is how we get started here at the Property Bloke with what we call the Steadfast method. Now, people often ask what Steadfast means, and it basically means a strong and safe solution to secure your financial future through property. Using our method will enable you to establish an indestructible foundation to elevate your property portfolio success. So in a nutshell, it's a safer way of doing it. All right. So, and a lot of you who are watching tonight, if you are existing customers, you may have seen me do this before, which is a common thing we do, but this is more for the people who haven't seen it yet, who haven't seen the way I do it. So the first thing we do is we get a cash flow property, which I will show you in a minute what I talk about as a cash flow property, and a growth property. We line them up next to each other. And say, for example, the cash flow property might be positive geared, say $100 a week. And the growth property might be negative geared by $100 a week. So as long as both properties are funding themselves, because I always will say to you, treat property like a business. So this is a self-funded business. It's going to get you growth, and long-term, the cash flow will increase with inflation as well. But it's not going to cost you any money out of your own pocket. We're just going to use equity. In some cases, we have to use savings. It depends on your financial scenario. And I have clients that will put 2 cash flow properties in place first, and I have other clients who do growth properties first as well. So it's not, as I said, this is I suppose, a general way of doing it. And when you're building your foundation up, it's like, what do you call a foundation? How many properties do we call a foundation? So what I've got here is, say, 4 properties as an example. Some people it's 2, some people it's 4. It can be, say, what have we got here? We've got 6, and you might even go 8. Realistically, when you're building your foundation of properties, to a certain degree, I never like people to max out on their borrowing capacity to the full maximum. But obviously, when you've got 8 properties, you're probably going to be quite up there in relation to maxing out your borrowing capacity. But if you've got 8 properties working for themselves, separate to your own home, that's a really good foundation to work off. And you could basically, depends on your time frame of how long till you've got to retirement, that might be all you have to do, okay? Just put these foundations in place, and that's it, end of story. So when we're putting it together, these are the style of properties. When I say cash flow, this is an approximate. This is just one thing we use for cash flow. So this is what we call a dual income property. So you'll see there across the top, I hope you guys and girls on phones can see this. It could be a bit small, but you've got a 2-bedroom, and on the other side, you've got a 3-bedroom. So this is not a duplex, just for those who think it's a duplex. This is what we call a dual key property. So this comes under the council regulation, very similar to a house and a granny flat. Well, a house and a granny flat is another dual income property we can use as well. But basically the 3-bedroom side, that is the main dwelling, and the 2-bedroom side is the secondary dwelling. So in some councils, they don't allow it. So say, for example, in Queensland, they don't allow it in all parts of Queensland. New South Wales, it's quite common. The council will allow this. I'm guessing it's not, some regional areas may not allow it, but you've got to be careful that you do fit the council requirements. So it doesn't always work. So I just wanted to pop up some examples here for those guys who are watching this, whether you're watching, because I get clients all over Australia. So depending where you're watching from, this might connect with you. So I've got one here in Maitland, which is basically west of Newcastle. That was 600, getting 760 a week. And that property was cash positive, $15,000 a year. So that was a really good cash positive property. And then I had one here, South Brisbane. We've got 535, 680 a week rent. That's also cash positive, a bit less there at 13,000, but it was still a really good property and always has a tenant. Okay, then for growth, with the growth properties, I suppose the best way of explaining it is it's a traditional style home and land. So with this house and land we've got here, it's a 4-bedroom, 2-bathroom, double garage. Quite simple. We don't like to go too small. You can go too small with this style of property, but of course you don't want to go too big either, because you're really paying at a per square meter rate. So you want to make sure when you build a home, even the dual keys, for example, that the square meterage you use is comparable to the rent yield you're going to achieve, because there is a breaking point where either A, your property is too small and you're not going to be able to find a tenant because no one wants to live in it, or B, your property is too big, where you will find a tenant, that's great, but the rent yield will be limited for the area. You want to make sure you don't push your prospective rent yield over and above the median value or the rent for that area. Otherwise, not that you'd be left with a vacant property, your return on investment won't be there, and you could have wasted 10, 20 grand on the build that you didn't need to do. But we are finding a lot of builders now are putting a good amount of inclusions in place. So realistically, the builders we use are fully 100% product. And for those of you who watch me on a regular basis, you would have seen that in my building video I did there a month or so back. There's 100% complete product. So you just walk in, do your final inspection, pay your final payment, and your tenant can move in a week later. All right. So for a house and land, here we are again, New South Wales and the Hunter Valley, which of course is west of Newcastle. That was at $495 at $480 a week rent. That one was actually cash neutral, so that worked out quite well. The rent was covering the mortgage on that one. And this one here's in North Brisbane in Burpengary, for those of you that just to give you a suburb as an example. This one was $465 and rent for $440 a week. I think the rent's gone up now on this one actually. And that was cash negative around $30 a week on that one there. All right. So what I'm trying to say, guys, is that's how I build a foundation, okay? It's cash flow. Hang on, I'm just going to stop sharing this for a sec. Okay, I'm back. So foundation is, it's got to be safe and secure properties. Try not to go too out there. Try not to go too expensive. Try not to go, too cheap either. But a foundation is, it's got to be a safe and secure property, guys. It's going to regularly rent, get continued growth. Now, the growth doesn't have to be, a hotspot growth every single year. You're not going to get that. So you want an area with a consistent growth, not just with the property value, but also with the actual rent price as well. That can be a hard one in some areas. So guys, I'm just going to share again as well, because what I want to show you is that's the beginning of your portfolio. So what I mean by that is, if you want to go to the next level, so I always show this on the basis of, okay, if you're a passive investor, your foundation of your portfolio is probably where it's going to end. You'll be happy with it to stay there. But if you want to be a little bit more of a professional investor and become a little bit more hands-on over time, which that will give you bigger returns long-term, we need to elevate yourself. So, and what I mean by elevate means, hang on. Excuse me, guys, give me 2 secs. Now, I showed you this quickly before, where you've got cash flow, growth, education will give you some choices, okay? But if you want to be what we call a professional investor, that's where you've got to basically start to elevate yourself and get a lot more knowledge in place. And of course, it comes with a higher risk level. So for those of you who are interested, I'm just going to show you quickly just 2 prime examples that I do that help. So when you're how do I say it? When you become a professional investor, you have to do, you can do chunk deals, and there's a million things you can do. But let's just say 2 examples. You want chunk deals to get big capital over, say, a 12-month period, but you also may need cash flow strategies as well. So this cash flow strategy I do here is one I use, but it's a very hands-on strategy. It's not one you set and forget, for example. So this is where I will go out here. And this is just so for people, all those Karens out there, this is not Airbnb, okay? Not Airbnb. This is where we basically go and rent a property. We traditionally rent a 4-bedroom home at $450 a week. We will go and pay rent to that landlord at $450 a week. But then we will 100% furnish this property. Now, a furniture package, all done and dusted, is about $10,000, $12,000, depending on where you got it. But here at the Property Bloke, we have many spreadsheets that we refer on for that. And what we do is we will, in this scenario, we'll rent the rooms out individually. So for some people, this could be a room share. It's not a boarding house. You've got to make sure the landlord is fully aware of what you're doing. You can't hide from that. And you can't use leases in the rooms. You have to use room agreements to make sure you abide by the local council regulation as well. But of course, you've got to have fire safety in here as well. There's other things you have to have in place to make sure it's all safe and secure. But in this example, we're going to get rent of $850 a week. So we've got a $400 margin here. But of course, we have to pay for the package, which is, as I said, let's just call it $15,000. We pay to get this property up and running to be able to do this strategy. Under normal circumstances, I will sign a 5-year lease, I'll start again, a 2-year lease with 3 1-year options. The reason why I do that is I want to make sure I get value for the money I outlaid. And if it costs me $15,000 to get this property ready, I want to try and make $15,000 profit in the first 10 to 12 months of this as well. So new rent, $850, but we have to pay expenses. So we have to pay for power, we have to pay for gas, we have to pay for internet. I also get the property cleaned every fortnight, and I also have the lawns mowed every fortnight. Now I'm lucky now. My dad actually mows my lawns for me. So, but not everyone will have that luxury, but you can also, we were paying, of course, but with the wet weather, they just become unreliable, and my dad was bored. So he was, put his hand up, and I went, okay, no problems. But of course, I'm still going to pay them, pay my dad as well to do my lawns, even though he doesn't want the money, he's just bored. So less expenses, we're looking at about a 300, this is on average too, by the way, about $300 a week profit, and that gives you around 15 grand a year. Now, the upside to this is we don't own the property. The downside to this is we don't own the property. Does that make sense? The upside is we don't own the property, because if any maintenance or anything along those lines, we don't have to fix that. The landlord has to fix it. The downside, though, is if this property increases in value by $500,000, we don't get anything for that. The owner gets that, but the owner gets the security of a 5-year of a basic 5-year lease, and we get the security of the 5-year lease as well. In every strategy you do, guys, whether it's a cash flow strategy, whether it's a chunk deal, whether it's a renovate and flip, everyone has to win. So the seller has to win, you have to win, and the buyer has to win. If you do that strategy with everyone winning, it'll be a lot less stress, and you might make a little bit less money, but it's not worth that extra few dollars. Sorry, guys, got a bit of a tickle in my throat tonight. But this is one of the cash flow strategies I personally use. Okay. And it's called, just so you know, actually, I'm just going to go back. That's called rent to rent, where you rent and then you rent the property out as well. That's what we call it here at the Property Bloke. So this is what we call a chunk deal. So this is using option contracts. So it's not a traditional land contract when you buy this. You buy under a put option, or what we call a put and call option. Very similar to share trading, how they use put and call options. It's a very similar structure where you don't own the property, but you have control over the property. The reason why I don't want to own this property is because I'm going to subdivide this block of land. And the reason why I don't want to own this property is for 2 reasons. One, that's probably 3 reasons. One, if there's a problem, I can walk away from it. 2, which name do I want to buy this property in? Do I want to buy my personal name, company name, a trust name? When you first buy the property, you might not know, but you can make that decision before your option expires. And 3, if your DA comes out of council in a good, quick process, you're in a position where you can on-sell that property. Now, when you on-sell it under a normal contract, you will pay stamp duty. So this will eliminate the stamp duty if you decide to do that. Because you've got to understand, some blocks you pay for depends on what style and how aggressive of an investor you are. If you go out and pay $2 million for a block of land to subdivide, not only do you have to pay the DA, etc., but if you buy under a normal contract, you're going to pay 90 grand in stamp duty. So you don't want to pay that until you're 100% committed that you want to physically take ownership on this block. So we get 1 block of land. It's quite simple. No, sorry, it's not simple, but this explanation is simple. 1 block of land. We put a 12-month option in place to buy it $500,000. And then what we do is we go to a private town planner, submit the DA, and get the council approval plans done. Now, individually, you know, you might take ownership, and I'm just doing round figures here, guys, like I always do. Please don't pick on me. You might sell these at 165 per block. And it's quite funny, if you've got a 12-month option and your DA comes out in 9 months, you can sell these blocks off before you even own it. So you can test the market on if they're going to resell or not before you even take ownership on this land. And that's the beauty of an option contract. You've got control of the property, very similar to the cash flow strategy. You've got control of that property as well with a lease, but you don't have ownership yet. Sometimes owning the property to do work and to do structures, etc., is not the best option in the beginning. You may prefer to have control, but not ownership. And this is where professional investors make money that you know, your mum and dad investors aren't aware of. And then of course, we've got sell at 660, and there's 160 gross profit in there to make. Now, if you did that over a 12-month period once a year, you're probably going to replace your income. But of course, we never recommend to do that straight off the bat. We always recommend to have a foundation in place. All right. So that's where you can get to with the property, Blake. I think that's it. Sorry, guys. Yeah. All right. So that's the benefit of having a good structure. If you've got a solid foundation, when your confidence builds, your knowledge builds, you'll be able to enter into that next level professional investing. And for me specifically, having that security that if something went wrong when you're doing professional investment and all you've got is your home to fall back on, that to me scares me. But if I have an investment property where I have equity that I could possibly sell or borrow against, that would make me a lot more comfortable, because where I see professional investors go wrong, it's very similar to share trading, for example. That investor that has that share or stock and it's going down in value and they think it'll come back, and it just doesn't, and they lose a big chunk of money. That's very similar when you're professional investing. It gets to a point where you have to make a call and take a loss, because that loss could grow, it could get bigger, or it could delay your strategy 2 or 3 years, which realistically, you lose the opportunity cost of more developments down the track. Alrighty, guys. Oh, hey, Leanne. Hey, Ingrid, you're watching tonight. So, guys, feel free to reach out to us anytime. That's all I've got time for tonight. I don't like to do these for too long, of course. We've been on here about 20 odd minutes. But, guys, Jess will put into the comments a 15-minute call. And if you have any questions, you can always post in here. Does anyone have any questions at the moment? Sorry. I'll just wait a couple of minutes for that if you have a question. But also next week, we're actually going to go through everything, questions and answers. We're going to do a Q&A next week. So instead of me yabbering on about what I want you to learn about, next week, we are going to talk about what you want to learn about. So throughout this week, I'm going to be posting a few things in the group about questions I want from you, because that way I want to make sure next week I'm answering questions that you exactly want to hear from. And we're going to start doing that once a month as well, because I've been getting a bit of feedback on that, where some people are a little bit shy to put the questions in the group. They prefer to do a live Q&A once a month, and therefore it's not them asking those questions. All right, guys. But thanks again for watching tonight. I look forward to chatting to you again next Tuesday. Everyone stay safe and have a great week. See you later.